Hey, George Tsilis is back. Welcome back, senior markets correspondent George Tsilis with us here. We've been hitting some records, George. Check it out, and we may hit some more right now. Some of your thoughts on the action?
Well, I think the action is quite telling, considering the trend is extremely positive. I think the larger picture is, we've got the debt ceiling concerns out of the way, that the Senate and, of course, the House bill or congressional bill passed. So there's quite a bit of fiscal stimulus that's really being placed in this market. Tax cuts. I think that's an embedded catalyst that we've seen irrespective of higher rates. I think if you look at the S&P, obviously hitting some new highs are getting close to the rate of change is getting smaller every day. So for what it's worth, that may be based on some low volumes in the summer. Ideally speaking, even looking at the technicals on the S&P from the February highs to the April lows, we could see an extension of that by about 50%, which places the market at least in the coming months somewhere around the 6,700 to 6,800 area. But it doesn't necessarily mean that it's going to go up in a straight line. If you look at the NASDAQ or the triple Qs, trending above the 20-day moving average has obviously been a growth on movement since April. One of the areas that I found interesting right now is there's obviously a clear divergence between growth and value. If you look at Berkshire Hathaway, that stock actually peaked around April when the market was bottoming and has been down around 12.5%. So for what it's worth, it may be indicative of what the economy is doing, which is basically trending positive, albeit at a slow pace. Or essentially, there may be some opportunities in more value-oriented stocks if this market does pull back, contingent upon some of the earnings that are coming up, which are big ones.
Right, understood. I mean, look what's going on here. When you look at the Dow in particular, the Dow 30, does that tell us something?
Well, see, if you look at the Dow, we haven't actually hit new highs in that indices. If you look at the Russell, that one is not performing as well as the mega cap names, the technology areas, and of course the broader S&P, which is jam-packed with the mega cap names as a weighted presence. But anyway, the Dow itself, again, from a cyclical standpoint, more sensitivity in the transport space. So I think that's important to keep in mind. For instance, we do have Union Pacific posting earnings on Thursday. So some of the transports are not necessarily moving in tandem with the Dow. So that's something to be mindful of. But overall, I mean, obviously this has been a growth move off the April lows, particularly the Mag 7s, as well as an entire fringe of stocks, outside of the large caps, including, of course, the quantum names. The crypto names have been moving extremely high. And anything associated with, autonomous technologies, aerial technologies, and so forth, companies like Archer, Joby. So a lot of these high beta names have been moving. So for what it's worth, again, there may be some rotation, a healthy rotation, out of the growth areas, the profit growth areas into some value areas.
And what about small caps here? I mean, everybody's been waiting for the Russell to kill it and hasn't quite done that. Your thoughts?
Well, there's a couple things to consider the small caps. First, the dollar weakness, I think, is presenting a challenge considering they're more import sensitive. So, again, I think they're being hurt from that standpoint. If you look at interest rates, we're really in a trading range. If you look at the last 9 months on the 10-year between 4.8 and 3.8, so it's basically a 100 basis point trading range. We're right in the middle around 4.3. I don't necessarily think the rate complex is going to essentially help the Russell. It certainly could if that changes. The talk about Trump and the drama around Trump and Powell is still ongoing. But again, that might be the opposite of what the market thinks. If Powell does step down or Trump does displace him in some legal capacity, that actually might cause rates to spike to the upside, considering it might be an inflation scare. So again, that's something we have to be mindful of. And of course, the ongoing tariff evolution, that can change considering, again, coming up in early August or some deadlines that need to be either postponed or potentially could present some challenges going into the end of the month. And lastly, this July has fit seasonal trends. July typically is a great month in the markets, which top out typically in the end of July. So we've got earnings, major catalyst, but also can create some volatility. And then again, some maybe some selling based upon some profit taking we've seen since the April lows.
Okay, and last but not least, what about Berkshire? Why is that on your radar now?
Well, I'm just, like I said, I'm picking up on some potential indications of where markets will start to rotate if we do see a mild correction. I think potentially the NASDAQ could pull back to the 20-day moving average, which is normal. But I think there are some signals and that they're always changing. And I think looking at big names like Berkshire, which are very heavily weighted in the Treasury complex. So if we do see some interest rates that move to the downside, that might actually help Berkshire. Or if we do see some interest rate movement to the upside, there may be some rotation back out of growth into value. So I think it's one to keep an eye on, just because it's been down pretty significantly since the April highs it posted when the markets posted their lows.
And that's it. We're going to leave it right there, George Tsilis, as we see the markets right here. Oh, one more point, and we're at records for the S&P 500. Thank you, George. Good to see you, George Tsilis.